There is a phenomenal disruption, especially for finance operations. So try to view it very realistically. Every single BPO company is trying to reinvent themselves as an agentic AI company because they were doing finance and accounting operations for their clients, and they were doing, and majority of the big companies already outsource their finance operations. That's the reason I'm taking a segue of BPO first. Whether it's a BPO or a GBS center, you do not have it in house. You have kind of a standardized your operations and given it to someone else to run. So the cost commercials of those models is shaken. So if a human being can process 24,000 transactions in a year, AI can do 350,000 in a year, and AI will not ask for leaves. So that's the reason once these agentic AI systems are introduced, and the way they are being tested out, experimented out, and all those things, it's coming to a conclusion that, okay, finance is something which can be completely given to agentic, well orchestrated agentic systems to run for at fraction of a cost. So there is phenomenal scale, and that allows you scale from a business support standpoint as well. The second disruption is domain is becoming more important, especially on finance. And that's where people did not realize. People worked 10 or 12 years of experience just processing invoices, did not peeked into whatever different areas of finance there are, disregarded their training as an accountant, uh, and worked on single focus thing. That's not going to work right now. Domain knowledge is becoming the key differentiator, because you will start seeing AI is processing the transactions, and there is an accountant training AI how to process the transaction. How do you get the decision intelligence of an accountant inside the algorithm of an AI? So that will start happening, and that is going to be a huge disruption. The third thing will be you can unlock a lot of the business outcome related metrics in your balance sheet, in your financial statements, in your profit and loss account. You can unlock a lot of value. And if AI works for you, it's your financial statements that will speak out loud. If it is something else, maybe AI was not that effective, because it's disruptive, it can scale fast, it can learn on its own. You can set things up, you can set stuff up. If you do it with the hands that are shaking and shivering, there is no chance that it will move beyond pilot. You have to be very conscious of costs as well, because if some organization has got millions of transactions and they are trying to put entire set of transactions into a vector database, and then we will run queries onto it, and there will be token exchange, you're talking about a lot of money fleshed out. Because you're not smart and you do not understand it, you have gotten things which you do not even need. A very careful pruning, a very careful optimization of resources, and understanding the different costing layers that are there in a typical AI setup. Do I have cost associated if, let's say, I put up a chatbot out there and the chatbot starts using some bad words in front of a customer? Do I have some legal liabilities on that? Are you considering those kind of things? Are you considering the infrastructure cost? Are you considering the support cost, the run cost, the inference costs? If I am getting, all we understand is, okay, give us a bundled quotation. It's no longer about bundled quotations anymore. Start thinking layer by layer, what all exists in your stack, what all is at what rate card, how much it would cost you, do you have the ROI, by when you will get the ROI, what will be your payback period. It is time to think about those things. If you experiment with AI without those, you'll burn your hands. It's a very open warning.